Hey folks, this episode is sponsored by City Traders Imperium. Now, what you might not know is CTI has the best funded account conditions up to $2 million, which is the most in the industry. Now, go check out the video I recorded with them to learn more about their incredible package where Trading Nut listeners get an exclusive deal. It includes access to their high-performance trader mastermind and funding program. What are you waiting for? Click the link in the description below or above and go check out that video. All right, folks, we've got Cas Daamen here on the Trading Nut podcast. We've just done a fantastic little episode. Link below the video here. Cas is about to walk us through his full trade setup. Do you want to tell the guys what you're going to walk us through, in fact?
Yeah, I'm going to talk about a setup I took last week in the GBP Aussie, and I'm basically going to start at the daily chart and talk about how I enter, why I enter, where my target is and why.
Brilliant. Look, guys, you're basically going to get a full-on trading educational course here. So let's dive in. Open your screen up and let's have a look at it.
All right, so this is a setup I recently took in the GBP Aussie. It was a long trade, and I will basically talk to the entire process of me identifying an opportunity with an edge, and then entering and allocating risk accordingly. So like I said in the interview, I always start at the daily time frame. And what I do on the daily time frame is I identify important swing points to the markets. An important swing point to me is this, because I look at the move to the upside that followed. Very strong and very, very aggressive. So I start on the daily and I mark out these levels, and I want to see a false breakout of these levels. Why do I want to see a false breakout? Because there will be some liquidity below the low of these swing points. People will be selling the breakout to the downside over here, and people will be long having their stop losses below. So I want to see that liquidity below these lows get absorbed by a bigger player to potentially join him, and that's exactly what happened on the 7th of January. As you can see, the low broke and we got a rejection and a close above the level, and that to me gives me a bullish bias. It's not a reason to enter for me, but it gives me a bullish bias, and then I wait a few days to see what develops and if I can enter with a statistical edge. And that's exactly what happened over here. Like I said in the interview, my trading is around 90% mechanical, and this is the mechanical part of my strategy. I basically quantified this pattern, and I quantified the closes, the lows, the opening prices and the highs. I made black and white rules for them, and I backtested that particular pattern over the past 10 years of data. I do that for every single pair I trade, and I want to know what the odds are of hitting this upper green line in case of a bullish setup like this one before taking out the purple line. And I know that on this setup there is around 65% chance of hitting the upper green line before the purple line, all based on past performance. So now I have the bullish bias and I have the statistics in my favor to go long. The target, the upper green line, is always based on these statistics, but the stop loss is based on discretion, and that's what I do on the hourly time frame. So let's zoom into the hourly. This is the particular day in question.
Hey guys, quick message from my sponsor Sage Capital. Now, they provide education software and tools needed to increase anyone's ability to trade more successfully. Perfect for people who are either still learning, too busy, or just want to use professional grade strategies to build passive income. They've achieved high returns with relatively low risk and are available for auto copying today. Go to sagecapital.co.uk or click the link above and start auto trading today.
The discretionary part of my trading strategy is Wyckoff and Wyckoff accumulation and distribution. People that are familiar with Wyckoff, this is a accumulation pattern. It's not a very clear one, but it is one. The location is really important because the low of the accumulation range, so the spring, is the false breakout of that massive swing point on the daily chart, and that's very important to me, and that only enhances my bias. After this accumulation phase, we got a reaccumulation phase. And a reaccumulation phase is basically the same as an accumulation phase, but it happens after the uptrend has started. So we had the reaccumulation phase. During an accumulation phase, let me explain it very briefly, a bigger player in the markets accumulates a long position. Why does he do that? Because he cannot enter the markets like we retail traders do. Let's say, for example, he wants to enter 1,000 lots at 1.7483, but there are only 500 lots short and he wants to be long. That means only half of his big order will be filled and the other half will be filled at a higher price, which means he immediately starts with a loss. And that's something he wants to prevent. 1,000 lots is just an example because these people trade way bigger, but that's an example. They also don't trade on retail brokers, but you get the point. And to prevent that, they basically scale in and they build a position instead of entering. And they build it within ranges, and that's what an accumulation range is. Yeah, so once the range has established, there is a false breaker to the downside, as you can see on this candle. During that breakout, people that are selling the breakout they basically get trapped. People that were long and have their stop loss below this range will also get stopped out. And this is all sell side liquidity. So people are selling, actively selling, and people are getting stopped out on buy orders, which is also selling. And the bigger player that wants to be long can absorb this liquidity at a low price to fill his entire order. And that's what I want to see. Then I want to see a breakout of the range. And to me, breakout of the range happened over here because this high was still within the accumulation range. And it was on the same day, so that's also something I take into account. So we hit this, a bit of a retracement, and then we break out of the blue box. And to me, this candle was the breakout. So a lot of people like to enter at a retest of a breakout. I don't. I enter at the breakout itself because I noticed it's more profitable for me. So yeah, the red line is the entry after the breakout of the accumulation phase, after the bias that happened, and after the statistics are in my favor. So I always want these statistics in my favor. If they are not in my favor, but there's still accumulation, I don't enter at all. I want everything to line up. So we have the entry, we have the targets, but now we are going to put in the stop loss. And my stop loss was at this green line. Why was it at this green line? Two reasons basically. Number one, my trading journal. I keep track of every single trade I take, and according to my trading journal, my stop loss can be here without impacting the chances of hitting this target. So that immediately increases my risk reward ratio. The second point is that after an accumulation range, you always get a bit of a retracement within the range, and people that are smart enough to be long will usually have the stop losses below here. And I don't want to get stopped out with these people. So my stop loss is a bit lower, and that's basically the discretion of the strategy. So this trade I made 1.2 R with a 65% chance of hitting the target, all based on past performance. I do trade around 12 pairs, and on every single pair I have these statistics. And on some pairs the setups work way better, so I allocate more risk to the setups that work better and less to the ones that work a bit less, and that really increases my performance. So this is how I trade. I do this for every single trade I take. I hope you guys learned a lot from this setup and from the interview. It was a pleasure to be here, and hopefully speak to you guys anytime in the future.
Cool, brilliant. Well, look, thank you for coming on the show, sharing with us these trade setups, and also your full story in the podcast. I'm just going to stop sharing your screen here. Do you want to let the guys know what the best way is to get hold of you? Via Instagram at Cas Daamen, or through my website, which is www.cdfxtrading.com. Superb. Well, look, guys, do remember to head over there to Trading Nut to listen to the full interview we just recorded with Cas here. It's amazing stuff. You're going to learn his full story on how he got started all the way through to how he found success. Very unique, very different from a lot of the other interviews that I've had on the show, so worthwhile checking out. Link underneath the show notes. Also, do remember to hit subscribe, hit like, and also hit the notifications bell. Click all if you want to get notified on future videos like this going forward. All right, thanks for watching, guys. See you in the next one.